You want to know, is SOFI stock a buy now? I got you covered. This video will provide an earnings update, analysis on the financials and the technicals, and commentary whether or not I think SOFI stock is a buy now. SOFI stock was up over 20% yesterday. Today it's down about 3%. It's trading right under $9 a share. Now, even after being up 20% yesterday, it's still down about 8% year to date. Over the past year, it's up 33%. And over the past 5 years, well, basically since it went public here, December 4th, 2020, this was a SPAC merger. You're down about 15% since 2020. And the company posted its first ever quarterly profit. Non-GAAP EPS of 2 cents a share, missed by 2 cents. That was the expectation. Revenue, $594 million. That was up 34% year over year, and it did beat by about $22.75 million. The guidance here is impressive. For the full year of 2024, management expects tech platform and financial services segments to grow at least 50%. Guidance anticipates adjusted EBITDA margin of approximately 30% by year end, and that equates to a range of $580 to $590 million for this year. For me personally, this is always one of the most impressive slides on the SOFI earnings decks. You know, new member additions, 585,000 new members in Q4. That's bringing the total to 7.5 million. That's up 44% year over year. And you can see that growth from Q1 of 2020 to Q4 of 2023. This is members in thousands. And you just love to see it slowly climb upwards. That's exactly what you want as an investor. Now, this stat is often misunderstood. New product additions, 695,000 in Q4, bringing the total to 11.1 million, 41% year over year growth. Now, that doesn't mean unique products like SKUs. It means if you have, for example, a customer and they have 4 different product sets. In other words, they have a checking account, they have a savings account, they have a student loan, so on. That's going to be considered a new product. So you have to look at the number of members, 7.5 million members, 11.1 million total products. So that shows you there's room for growth there, because let's just assume you have 7 million members and every member has 2 different product lines. Well, that's 14 million. That's still 3 million away from where we're at right now. This is also quite impressive. So quarterly performance, record adjusted net revenue, 594 million. That's up 34% year over year, and record adjusted EBITDA of 181 million. That's at 30% margin. Now look at the chart on the right-hand side of your screen. That's a massive jump. So this is in millions. You can see that pop from last quarter, 98 million to 181 million. That's a huge jump. This is also what you want to see as an investor, going from negative to nicely positive. This is annual adjusted EBITDA. So this is the guidance for fiscal year 2024. But instead of reading through this, let's hear from CEO Anthony Noto.
Shares popping double digits on those strong results, almost up 23% right now. CEO Anthony Noto joins us. Anthony, thanks for being here. Big quarter for you all. Profitable one, record revenue across the 3 businesses. Solid profitable outlook as well. What are some of the key drivers that you think led to these results?
Well, Leslie, thank you for having me on. You know, I'd say the strategy overall has really come into play and delivered exceptional results for the quarter. 6 years ago, we embarked on this very ambitious strategy to be a one-stop shop for all your financial services needs. When I joined the company in February 2018, we were primarily just a lender in 2 products. Today, we offer not just 4 types of loans, including home loans, but we also offer SOFI Money, which is a modern checking and savings account, SOFI Invest, SOFI Credit Card, insurance products, and we also power 140 million accounts across the fintech industry through our technology platform that we outsource to our partners.
So in 2018, 2 different products. Did you hear all the different products they have now? Doing an amazing job expanding this and trying to be a one-stop shop for financial services online. Now we'll talk later about valuation, how the market perceives SOFI. But let's continue listening to Anthony.
This quarter really reflects the fact that the financial services segment is now profitable and growing quite meaningfully. The tech platform business is also profitable with accelerating growth. And that's really the drivers of growth going in 2024 and less so the lending pieces. So it was a combination of that strategy over the last 6 years being invested in and then coming to fruition in 2023 with record revenue of over $2 billion and record EBITDA and actually hitting our long-term EBITDA margins at 30%. And as you mentioned, GAAP profitability for the first time, which will sustain in 2024.
So these are impressive numbers, and GAAP profitability for the first time ever. If you look at the job that the executive team's doing, you couldn't ask for much more as an investor.
This all comes against a macroeconomic backdrop that for a lot of lenders remains uncertain. And you have a pretty conservative outlook for 2024, baking in a 5% unemployment rate, 4 rate cuts, which is, of course, fewer than the market is pricing in. So what are you seeing in terms of customer spending trends, portfolio quality that is helping to inform your outlook for 2024?
Yeah, as you mentioned, we did take a very conservative view on the lending part of the business for 24. We are expecting 75% year-over-year revenue growth in our financial services segment and 20% year-over-year revenue growth in a tech platform, and really no growth in lending because of that conservative view that we're taking. We do expect credit to normalize. We're seeing those trends across the industry as well as at SOFI, and so we're taking a very cautious view there. In terms of underlying spending trends within SOFI Money, we had $1.6 billion of point-of-sale debit spending in the quarter. That's annualized at about $6 billion. It's up 3x from a year ago. We're seeing strength within existing accounts, but we're also adding new accounts, so it could be a little bit misleading. In addition to that, we have been observers of the broader market dynamics. We've seen some levels of liquidity dry up in certain markets. In addition to that, the largest banks have seen an increase relative to 7 and 10-year highs in write-offs, delinquencies, and then the provisions for losses of one of the largest banks were up 50% sequentially. So we're really bullish about our financial services segment, which is growing quite well.
You notice how right here they're showing the big banks. They're comparing SoFi to Citigroup, JP Morgan, and Wells Fargo. We'll talk more about that later.
75% for next year in tech platform, but conservative on the lending side.
Hey, Anthony, some of the macro stuff that got commentary in the earnings last week was about real wage growth rising again after 2 years of shrinking. Is that starting to make itself felt within the metrics?
We're not actually seeing an impact on spending. We are obviously seeing a normalization of credit back to pre-COVID levels.
And again, you see Goldman Sachs, Bank of America, Morgan Stanley. They're comparing SoFi to big banks on CNBC while they interview the CEO.
So that's where it's showing up on the spending side. That is still strong, but the credit side across the industry as well as at SoFi is definitely normalizing, which is why we're taking a conservative view. The unique thing for SoFi is that in 24, 50% of our revenue will be from technology platform revenue and financial services, and 50% from lending. In previous years, it was as high.
So 50% fintech and 50% lending. This is more of a hybrid, not necessarily a bank by bank standards, but also it's unique in the fact that it has a bank charter. And so it does some banking. And so it's hard. Do you label it as a fintech, as a bank, somewhere in the middle? How do you put a valuation on SoFi? I like this comment because it's really true. And if you think about the following that SoFi has, it's kind of one of those cult stocks. A lot of individual investors, sometimes referred as retail investors like you and me, well, we really like the products. And so oftentimes you invest in what you know and what you like. And regardless of what Wall Street might think about SoFi, saying, well, it's just a bank because it has a bank charter. It's got, brick and mortar bank. It's not a fintech play. It's clear that customers love SoFi's products. And you'll hear that time and time again from people that use SoFi. And it's a company accumulating more than 1 million members every 90 days. I think that number is a little off if you look at this last quarter, but regardless, growing members at a strong clip and lots of opportunity to expand that footprint, upsell and sell more products to those members as they grow. One thing I don't want to forget to point out to you, short interest, 13.25%. So when you see a big pop like 20% yesterday, well, that could be some people covering their shorts. And so you think of a short squeeze, of course, that's going to be part of it, especially as the stock goes higher. Now, today it's down 3%, but you're going to have extreme beta and volatility when you have short interest at 13%. So keep that in mind. Now, earlier I showed this to you from Seeking Alpha. Q4 non-GAAP EPS of 2 cents misses by 2 cents, but the actual EPS is 2 cents. It beats by 2 cents. So that's something to keep in mind. So when you saw that first headline yesterday, it looked like it was somewhat negative because it missed analyst expectations. But you look at the EPS, the GAAP accounting, the actual is 2 cents, and that beat by 2 cents. Profitability for the first time. Now, this is where it gets tough. How do you value SoFi stock? And next, I'll look at a chart give some commentary, what I think about the company, the stock, longer term and shorter term. So according to Seeking Alpha here, you've got PE gap forward 153. Price to sales is 3.64. Now you can look at some companies, especially like I've seen online, people comparing it to say Palantir. Well, Palantir is going to be a SaaS business. It's going to be B2B, focused on enterprise, has recurring revenue. The market is going to give it a different premium. It's going to value it differently. Now, the big question is SOFI a bank? Is it a fintech company? Is it somewhere in between? And if it is somewhere in between, how do you measure it? How do you value it? Because if it's just a bank, well, you're looking at things like price to book. And if you follow this channel, when this stock actually got $5 and less, we got to under price to book. And that was kind of the area where we said, we think it's a strong buy, pound the table, $5 or less. And now that price to book, which was once under a 1, is 1.74. But if this is a technology company and a fintech, you could argue that that's not too bad. Price to sales, well, the question is it probably doesn't deserve a 15 price to sales, but if it's a technology company, does it deserve a 5 price to sales? No, the growth is solid, 40%. You see forward growth of 21%, EBITDA growth 74%. You saw some of those numbers earlier. A+ ranking here on Seeking Alpha. Now, profitability is an F, but I wouldn't personally give it an F. In fact, the gross profit margin is 81.29%, and that's pretty solid if you look at the core of what this business does. And these numbers are improving. So if you look at something like net income per employee, they're burning $92,000 annually per employee. These numbers are improving though. We just saw GAAP profitability. A lot of times it takes time for these numbers to update. So I certainly wouldn't give it an F, but it's also not an A. You know, it might be something like a C, but it has growth supporting that. When you invest in a growth company that's still growing at a nice clip, even though that growth has started to decelerate a little bit, it has solid growth and it's maturing more into that profitability. And this is where it can become very hard to put a value on a stock. We use technical analysis as long-term investors to get better entry and exit points. And so really we're thinking about holding something for oftentimes 5 or more years. So when I show a chart like this, we do something called Chart Day every single Wednesday, Patreon Discord. We cover 20 individual stock tickers and the QQQ every single Wednesday at 9:00 a.m. Eastern. Those are recorded. If something like that would interest you and benefit you, check out patreon.com/firedupwealth. In fact, there's a 7-day free trial. You can go watch previous chart days to see what they're all about. So when you see orange, it's a previous chart day. And you can see down here, we did several different YouTube videos on SOFI talking about how we like the stock, especially under $5. So same as previous YouTube video, in that range, could bottom any time, could drift lower, retest before 24. DCA below $5 as long-term spec, strong buy under 1 price to book. And this is where a lot of members were buying the stock when it got under $5 in our Discord. But you don't care about that. You want to know, is it still a buy at $9 a share? So in the yellow, which I just changed to orange because this was from a previous chart day a couple weeks back, I said that this is a momentum name. We talk about being a cult stock, and some even call this a meme stock. Regardless of what you call it, it's momentum name. So it's going to have huge swings up and down. That short interest is going to play a part in that. If traders get behind this, like yesterday, well, I said you'll see it $10 plus, and it didn't quite get there, but it was over $9 yesterday just in one single day. Oftentimes when you see a big spike up, it'll consolidate. Oftentimes it'll go higher after it consolidates a bit. So is SOFI stock a buy now? Well, first, is it a bank? Is it a fintech company? How does it fit into your personal blueprint if you're buying this as a long-term investment? I personally don't invest into a ton of fintech, even though I do think it is a secular growth trend. It's a mega trend. I own Square in the main, and I have SOFI in both accounts. The main portfolio, the $1.8 million portfolio, and then the community portfolio also owns SOFI. I told the community in Discord yesterday after earnings that there are a couple things that come into play with SOFI stock. The first is that it was a SPAC. And honestly, there's a lot of negative sentiment on anything that was a SPAC. If it was a SPAC, it's trash. And I even have some broker friends that aren't allowed to buy stocks that went public via SPAC over the last several years during the pandemic era. So that definitely plays a part in it. Not only was it a SPAC, it's labeled as a meme stock. Chamath was behind it. A lot of investors just don't want to touch that. That's just being real. And honestly, the market, because it has a bank charter, the market wants to label it as a bank. I'm sure if you own this stock, you've heard this comparison before. And even if we don't agree with that and we say, no, it's a fintech company, it'd be like this. I like John Deere. John Deere, I consider ag tech. But the reality is, if the market says that it's an industrial stock, that's a 100-year-old plus industrial stock, well, it's going to trade like an industrial stock. So I think that SoFi has a lot of upside. But one thing to be cautious about is that the street, Wall Street, the market isn't necessarily going to give this a high valuation or a high premium. And I see a lot of comparisons again to things like Palantir. These are oranges and apples, completely different things. You can't really compare the two. SoFi, for example, is going to be much more focused on B2C. When you think of Palantir, it's B2B, enterprise, recurring revenue, SaaS, completely different thing. So you want to look at Palantir as an example and compare it to its peers in SaaS. And if it's John Deere, even though they have awesome technology, it's still going to be compared to its peers in industrials. Now, with SoFi, I do think that the stock can go higher. I would definitely be careful of overpaying for the stock because it does have extreme volatility both directions. For me personally, it was one where I was really confident when it was under one price to book, $5 or less. Now it's nearly double that. Is it still a buy? I would say if you look at the stocks that are out there, it's one of the more attractive names, and I can't see a scenario where it's not at least $10. Let's look at a chart one more time. I'll show you the possibilities. But before I do that, first I want to say that I am bullish on this stock long term, but I do have realistic expectations. I try to understand it, take a neutral thesis. Try not to be too biased about something I own. So I own the stock. I've got a decent cost basis. If it rips to the moon, I'm happy. And if videos like this are helpful, where we talk about technology companies, mega trends, and how you can make money off of these stocks in the stock market, subscribe to the channel, click that bell for notifications. And if this video is helpful, drop me a like and drop me a comment. Hold on here for the last part. So these are Fibonacci pivot points. And if you look at the upside here, it's probably going to have resistance around $10 if it gets that level. 1050 is going to be a retest. It's also right on the R1, the resistance one. So $10, 1050. This R2 is a little above $11. So around $11.25. And then this R3 is over $12. That's $12.52. And I do think that there's a chance you could see it over $12, maybe even $13. Won't necessarily happen overnight. And it's going to depend on the overall market. Mega cap tech earnings are reporting here over the next several days, and if those miss, the whole market could sell off, and this will sell off with it. If the market remains bullish, these are the possibilities that you could see on the upside with resistance along the way. And keep in mind, 13% short interest. So it's going to have extreme volatility. Is SoFi stock a buy now? I think it's going higher. If you look at valuation, it's not crazy expensive, but I'd much rather get it, of course, at lower levels. In the end, of course, I always say, do what's best for you and your money. Thanks for watching. Have a great rest of your day. Take care.